Question 1. Which of the following best describes the primary responsibility of an underwriter in the insurance industry? A. To calculate premiums for insurance policies based on historical data only. B. To assess risk and determine the insurability of a client or entity. C. To provide legal advice on insurance policy disputes. D. To manage the claims process and ensure proper payouts. Answer. B. Explanation. The core responsibility of an underwriter is to assess the risks associated with insuring an individual or entity and determine whether the risk is acceptable, as well as to establish the terms of coverage, including premiums and policy conditions. This process involves evaluating the applicant's information such as health, financials, and past claims to determine insurability. Option is incorrect because underwriting involves more than just historical data. It requires assessing multiple factors, including current risk, which is why the underwriter also evaluates an applicant's specific characteristics. Option C is incorrect because legal advice is outside the scope of underwriting. Underwriters assess risk and coverage terms. Option D is incorrect because managing claims is part of the claims department's role, not the underwriter's role. Question 2. Scenario. Mr. Thomas is applying for homeowners insurance in Idaho. He has a history of filing multiple claims in the past 5 years due to water damage caused by faulty plumbing. In his recent application, he mentioned no changes to his plumbing system. As an underwriter, what should be your most likely course of action? A. Approve the application as is, given that the plumbing system is still in use and hasn't been altered. B. Reject the application outright, as the previous claims history suggests an ongoing risk of water damage. C. Approve the application with a higher premium and require the applicant to provide proof of plumbing system improvements. D. Approve the application without any conditions, as multiple claims in the past do not necessarily imply future issues. Answer. C. Explanation. In this scenario, the applicant's claims history, specifically regarding water damage caused by plumbing issues, indicates an ongoing risk. As an underwriter, you should not approve the policy without addressing this risk. Therefore, option C is the most suitable action because it allows for coverage while taking the necessary precautions. Option is incorrect because approving the application without addressing the plumbing issue could lead to further claims, increasing risk for the insurer. Option B is too extreme. While the applicant's claims history is concerning, rejection without offering chance for mitigation may not be the best course. Option D is also incorrect because past claims should always be factored into underwriting decisions to minimize the risk to the insurer. Question 3. Which of the following is the most important factor for an underwriter to consider when evaluating the risk of insuring a commercial property? A. The size of the company applying for insurance. B. The age and condition of the property, particularly its electrical and plumbing systems. C. The marketing budget of the business. D. The total number of employees working at the company. Answer. B. Explanation. When underwriting commercial property insurance, the underwriter must evaluate the potential hazards that could lead to a loss, and this includes assessing the age and condition of the property. Specifically, older properties may have outdated plumbing, electrical systems, or building materials that pose a high risk of fire, water damage, or other types of loss. Option is incorrect because while the size of the company might provide insights into risk exposure, it is the physical condition of the property that is more critical. Option C is incorrect because the marketing budget has little to do with the risk of insuring the physical property itself. Option D is incorrect because the number of employees is not as significant a factor as the condition of the property in determining insurance risks for commercial properties. Question 4. Which of the following is the primary purpose of reinsurance in the underwriting process? A. To help the insurer avoid paying claims by transferring the responsibility to another party. B. To share the risk of large losses and prevent the insurer from being financially overwhelmed. C. To ensure that the underwriting department does not have to evaluate certain high-risk policies. D. To create policies with lower premiums by transferring part of the risk to consumers. Answer. B. Explanation. Reinsurance is a risk management tool used by insurers to transfer a portion of the risk they assume onto another insurer, known as the reinsurer. This is done to protect the insurer from significant financial loss due to large claims. It helps the insurer maintain solvency and stability in case of catastrophic events, especially when there are high-value or high-risk policies. Option is incorrect because reinsurance is not about avoiding claims, rather it spreads the risk of large claims Option C is incorrect because reinsurance does not reduce the need for underwriting. It is meant to manage the financial risk associated with underwriting. Option D is incorrect because reinsurance does not involve transferring risk to consumers, but rather between insurers. Question 5. Scenario. Mr. Dawson, an owner of a small retail store, applies for commercial property insurance for his business in Idaho. His store is located in an area with a high flood risk. The property itself is built with flood-resistant materials, and the store has comprehensive flood-proofing measures in place. As an underwriter, how would you most likely assess this application? A. Reject the application because the flood risk is high regardless of the store's improvements. B. Approve the application with higher premium as the store has taken steps to mitigate the flood risk. C. Approve the application at the standard premium rate since the store is using flood-resistant materials. D. Approve the application but add exclusions related to flood damage due to the high-risk location. Answer. B. Explanation. In this case, the store owner has taken proactive steps to mitigate flood risks by using flood-resistant materials and implementing flood-proofing measures. As an underwriter, you would assess this as a low risk compared to a standard property in a flood-prone area, but still charge a higher premium due to the residual flood risk. This ensures that the insurer is compensated for the potential risk. Option is incorrect because rejecting the application would be an extreme response, especially since the applicant has made efforts to minimize the flood risk. Option C is too lenient, as a higher premium should be charged to reflect the remaining flood risk. Option D is not the best option because while exclusions might be appropriate, it's not the primary approach to handling risk. A higher premium is more appropriate in this case. Question 6. What is the most critical factor in determining whether to accept, modify, or reject a life insurance application? A. The applicant's current income and employment status. B. The applicant's medical history and current health condition. C. The applicant's gender and age. D. The applicant's family background and lifestyle. Answer. B. Explanation. In life insurance underwriting, the most critical factor is the applicant's health, including their medical history and current health status. This helps the underwriter assess the risk of insuring the applicant and determine the appropriate premium and coverage. The underwriter is primarily concerned with whether the applicant's health presents a higher risk of death or disability. Option is incorrect because while income and employment status can provide context, they are secondary to health when underwriting life insurance. Option C is incorrect as age and gender are factors, but they do not outweigh the importance of medical history in life insurance underwriting. Option D is also incorrect because lifestyle and family background are considered, but medical health is the main focus. Question 7. Which of the following is the most effective method for an underwriter to evaluate the potential financial stability of a business when underwriting a commercial property insurance policy? A. Assessing the size and age of the building and its structural integrity. B. Reviewing the business's financial statements, including profit and loss records. C. Reviewing the company's social media presence for any signs of financial difficulty. D. Evaluating the business's market share and growth potential. Answer. B. Explanation. When underwriting a commercial property insurance policy, evaluating the financial health of the business is crucial. Financial statements, including profit and loss records, provide clear indicators of the company's ability to meet its obligations, including insurance premiums. This is the best approach for assessing the potential for business to continue operations without risking default on premiums or other financial obligations. Option is incorrect because while the building's integrity is important for property coverage, the financial stability of the business is not determined by its physical structure. Option C is not a reliable source for assessing financial stability, as social media presence does not provide concrete financial data. Option D, while market share can give an indication of business health, reviewing financial statements provides more direct and reliable insights into financial stability. Question 8. Which of the following is most likely to be considered a moral hazard in the underwriting process? A. An applicant has a history of late payments on insurance premiums. B. An applicant has made multiple claims for small, frequent losses. C. An applicant lives in a high crime area, increasing the likelihood of theft or damage. D. An applicant has a history of intentionally inflating claims to obtain higher payouts. Answer D. Explanation. A moral hazard refers to a situation where the applicant has the incentive to intentionally engage in risky or dishonest behavior because they know they are covered by insurance. In this case, inflating claims for higher payouts is a clear moral hazard because the applicant has the opportunity to profit from dishonesty. Option is incorrect as late payments do not represent a moral hazard. They may indicate financial mismanagement, but not a deliberate intent to cause harm. Option B is incorrect because frequent small claims could indicate a pattern of risk but not a moral hazard unless the claims are inflated. Option C refers to an environmental or physical risk, a hazard, but not a moral hazard, as it doesn't imply dishonest or risky behavior on the part of the applicant. Question 9. When underwriting health insurance policies, which of the following factors should an underwriter consider most heavily? A. The applicant's lifestyle, such as smoking or exercise habits. B. The applicant's income and employment status. C. The applicant's age and gender. D. The applicant's travel habits and places they visit. Answer A. Explanation. In health insurance underwriting, lifestyle factors like smoking, alcohol consumption, and exercise habits play a significant role in assessing the applicant's health risk. Smoking, for example, is high-risk behavior that can lead to various health issues, significantly affecting the insurance premium and insurability. Option B, while relevant in some cases, is less critical than lifestyle factors in health underwriting. Option C is important for risk calculation, but secondary to lifestyle factors, particularly for health insurance. Option D is not as relevant for health insurance underwriting compared to lifestyle and medical history. Question 10. Which of the following is a primary objective of an underwriter when assessing a commercial general liability CGL policy application? A. To evaluate the environmental impact of the applicant's business operations. B. To assess the history of employee lawsuits against the company. C. To determine the company's level of compliance with industry regulations. D. To evaluate the risk of property damage caused by third parties. Answer B. Explanation. When underwriting the commercial general liability CGL policy, one of the key objectives is to assess the risk of legal claims related to bodily injury or property damage that could occur on the insured's premises or in connection with their operations. A history of lawsuits, particularly employee lawsuits or claims made against the business, is a strong indicator of the company's potential risk. Option is not the primary concern of CGL underwriting. While environmental concerns may be relevant, they are typically assessed separately. Option C, while important for regulatory compliance, does not directly assess the risk of general liability claims. Option D pertains to property insurance but is not as directly relevant CGL policy as assessing the history of legal claims. Question 11. What is the primary purpose of a loss reserve in property and casualty insurance? A. To estimate future profits from underwriting activities. B. To account for unpaid claims and future claim expenses. C. To reduce the overall cost of premiums. D. To help insurers expand their market share. Answer B. Explanation. A loss reserve is an estimate made by an insurer of the amount of money needed to cover claims that have been reported but not yet paid, as well as claims that have occurred but not yet reported. This reserve is essential for ensuring that the insurer has sufficient funds to cover its liabilities. Option is incorrect because loss reserves are not designed to estimate profits. Option C is incorrect because loss reserves are set aside for future claims, not to reduce premiums. Option D is incorrect because market share expansion is not the purpose of loss reserves. Question 12. Scenario. A business owner applies for commercial liability insurance. During the underwriting process, it is discovered that the applicant's business has been cited multiple times for violations of health and safety regulations. As an underwriter, what action would you most likely take? A. Approve the application with higher premium due to the increased risk. B. Approve the application without any changes, since health and safety violations do not impact liability. C. Reject the application because of the health and safety violations. D. Approve the application with coverage exclusions related to health and safety incidents. Answer A. Explanation. When an applicant has a history of regulatory violations, especially health and safety violations, the underwriting process would likely result in a higher premium to account for the increased risk. The insurer may choose to accept the risk but will charge a higher premium to compensate for it. Option B is incorrect because health and safety violations do increase liability risks, which should be reflected in the premium. Option C is too harsh. Rejecting an application should only happen in extreme cases. Option D is incorrect as exclusions would be a less common approach compared to adjusting the premium. Question 13. What is the purpose of A deductible in a property insurance policy. A. To reduce the insurance premium by shifting some of the financial responsibility to the policyholder. B. To increase the payout of a claim in case of a major loss. C. To cover the entire cost of the loss to the insured. D. To extend the coverage of the insurance policy. Answer A. Explanation. A deductible is the amount the insured must pay out of pocket before the insurance company starts to cover the remaining costs of a claim. By having a deductible, the insurer can lower premiums since the policyholder is assuming some of the financial risk. Option B is incorrect because the deductible is the amount the policyholder must pay before coverage kicks in, not to increase payouts. Option C is incorrect because the deductible represents the portion the policyholder is responsible for. Option D is incorrect because the deductible does not extend coverage but rather affects the cost-sharing mechanism. Question 14. What is a per-occurrence limit in a liability insurance policy? A. The maximum amount an insurer will pay for all claims in a policy period. B. The maximum amount an insurer will pay for each individual claim. C. The minimum amount an insured must pay before coverage begins. D. The maximum amount an insured can claim in a single year. Answer B. Explanation. A per-occurrence limit specifies the maximum amount an insurer will pay for each individual claim or incident, regardless of how many claims are made during the policy period. Option A refers to the aggregate limit, which is the total amount the insurer will pay for all claims combined. Option C is incorrect because it describes a deductible, not a policy limit. Option D is incorrect as it does not relate to the individual claim limit. Question 15. In which of the following scenarios would a claims-made insurance policy provide coverage? A. A claim is filed after the policy has expired, but the incident occurred during the policy period. B. A claim is filed after the policy has expired, and the incident occurred before the policy began. C. A claim is filed during the policy period for an incident that happened during the previous policy period. D. A claim is filed within the policy period for an incident that occurred during the same period. Answer D. Explanation. A claims-made insurance policy covers claims that are made during the policy period, provided the incident occurred after the policy's retroactive date, which is usually set before the policy's start date. The coverage applies to claims made while the policy is active, regardless of when the incident occurred. Option is incorrect as it would only be covered if the claim is made during the policy period. Option B is incorrect because claims made after the policy expiration for incidents before the policy started are not covered. Option C is incorrect because claims-made policies only cover incidents occurring after the retroactive date. Question 16. What is the purpose of an umbrella insurance policy? A. To provide additional coverage when the limits of other insurance policies are exhausted. B. To replace other insurance policies with broader coverage options. C. To cover all types of property damage, including damage from natural disasters. D. To cover the deductible on existing insurance policies. Answer A. Explanation. An umbrella policy provides additional coverage over and above the limits of other underlying insurance policies, such as auto or homeowners insurance. It typically covers liability claims that exceed the limits of the basic policies. Option B is incorrect because umbrella policies do not replace other insurance. They provide extra coverage. Option C is incorrect because umbrella policies cover liability, not property damage. Option D is incorrect because umbrella policies do not cover deductibles. Question 17. Which of the following best describes insurable interest in property and casualty insurance? A. The financial interest in the well-being of an individual. B. The requirement to have a valid connection to the insured property or person. C. The belief that the insured will not suffer a loss under any circumstances. D. The ability to claim full value for a loss regardless of the extent of damage. Answer B. Explanation. Insurable interest refers to the requirement that the policyholder must have a legitimate financial stake in the property or person being insured. This ensures that insurance is not used for speculative purposes. Option A is incorrect because insurable interest specifically relates to a financial connection, not just well-being. Option C is incorrect as insurable interest requires a real financial stake, not a belief in avoiding loss. Option D is incorrect because the insured can only claim up to the actual value of the loss, not the full amount, regardless of damage. Question 18. Which type of insurance is designed to protect individuals against the risk of financial loss due to their inability to work caused by injury or illness? A. Disability insurance. B. Health insurance. C. Life insurance. D. Long-term care insurance. Answer A. Explanation. Disability insurance is designed to provide income replacement for individuals who are unable to work due to a covered injury or illness. Option B is incorrect because health insurance covers medical expenses, not income replacement. Option C is incorrect because life insurance provides a death benefit, not income replacement for work loss. Option D is incorrect because long-term care insurance covers costs related to long-term care needs, not income replacement. Question 19. What is the primary benefit of a replacement cost policy for property insurance? A. It covers the current market value of the property. B. It reimburses the insured for the original cost of the property. C. It provides enough funds to replace the damaged property with a new equivalent item. D. It offers coverage based on the depreciation of the property. Answer C. Explanation. A replacement cost policy covers the full cost of replacing damaged property with a new item of similar kind and quality without factoring in depreciation. Option is incorrect because market value considers depreciation, whereas replacement cost does not. Option B is incorrect because replacement cost provides enough for a new replacement, not the original purchase price. Option D is incorrect as replacement cost does not account for depreciation. Question 20. What is a moral hazard in insurance underwriting? A situation where an insured person has an incentive to take more risks because they know they are covered. B. A risk that arises due to environmental factors such as weather events. C. A hazard that is moral or ethical in nature impacting the claim settlement process. D. A situation where an insurer refuses to cover a claim due to fraudulent activity. Answer A. Explanation. A moral hazard occurs when the insured has the incentive to take on more risk or act recklessly because they know they are financially protected by insurance. Option B refers to a physical hazard, not a moral hazard. Option C is incorrect because a moral hazard involves behavior, not ethical issues around claims. Option D is incorrect because moral hazards refer to behavior that increases risk, not fraud. Question 21. Which of the following is a characteristic of an all-risk property insurance policy? A. It only covers damages caused by specific types of perils, such as fire or theft. B. It covers all perils except those specifically excluded in the policy. C. It only covers damage to personal property, not real property. D. It covers all types of property, including business interruption. Answer B. Explanation. A more risk policy covers all perils except those that are explicitly excluded in the policy. It provides broader coverage than a named peril policy, which only covers specific types of risks. Option is incorrect because an all-risk policy covers a broad range of perils, not just specific ones. Option C is incorrect because an all-risk policy can cover both real and personal property depending on the terms. Option D is incorrect because business interruption coverage is typically separate from property coverage. Question 22. In which of the following situations would a fidelity bond be used here? To insure an employee against a work-related injury. B. To protect an employer against employee dishonesty or fraud. C. To cover damage to company property from natural disasters. D. To provide liability coverage for company executives. Answer B. Explanation. A fidelity bond is a type of insurance that protects businesses from financial losses caused by employee dishonesty or fraud, such as theft or embezzlement. Option is incorrect because work-related injuries would be covered by workers' compensation insurance, not a fidelity bond. Option C is incorrect as natural disaster damage would be covered by property insurance, not a fidelity bond. Option D is incorrect because liability coverage for company executives is typically provided by directors and officers, DO insurance. Question 23. What is a coinsurance clause in a property insurance policy? A. It specifies the maximum payout amount for a covered loss. B. It requires the policyholder to maintain a certain level of coverage to avoid penalty. C. It limits the insurance company's payout to the market value of the property. D. It provides additional coverage if the primary insurer cannot cover the loss. Answer B. Explanation. A coinsurance clause in a property insurance policy requires the policyholder to insure the property for a specified percentage of its total value, typically 80% to 100%. If the policyholder fails to meet this requirement, they may face a penalty on any claims. Option A is incorrect as the coinsurance clause does not specify the maximum payout. Option C is incorrect because the clause does not limit payouts to market value. Option D is incorrect because the clause does not provide additional coverage from another insurer. Question 24. Which of the following best describes underwriting in the context of insurance? A. The process of determining the financial stability of an insurer. B. The process of evaluating and selecting risks to insure. C. The process of determining premiums based on market conditions. D. The process of providing claims payment for covered losses. Answer. B. Explanation. Underwriting is the process by which insurers evaluate risks to determine whether they will provide coverage and at what price, premium. Underwriters assess factors such as the applicant's risk profile, past claims history, and other relevant information. Option is incorrect because evaluating the financial stability of an insurer is a separate process from underwriting. Option C is incorrect because premium pricing is determined during underwriting but is not the same as underwriting itself. Option D is incorrect as claims payments are handled by claims adjusters, not underwriters. Question 25. Scenario. An insured's home is damaged by a windstorm and the policy includes a named peril coverage. If the windstorm is not listed as a covered peril, what would the insurer do? A. The insurer will cover the damage under a flood clause in the policy. B. The insurer will not cover the damage because windstorm is not a named peril. C. The insurer will provide coverage for windstorm damage under any circumstances. D. The insurer will reduce the claim payment based on the cause of the damage. Answer. B. Explanation. Named peril policies only cover the risk specifically listed in the policy. Since the windstorm is not a listed peril, the insurer will not cover the damage. Option is incorrect because the windstorm would not be covered under a flood clause unless explicitly stated. Option C is incorrect because a named peril policy does not cover damages from perils not listed in the policy. Option D is incorrect because there is no coverage for unlisted perils under a named peril policy. Question 26. Which of the following is an example of a secondary market for insurance? A. A broker selling policies directly to consumers. B. An insurance company purchasing reinsurance. C. A policyholder transferring their policy to another insurer. D. A company offering stock in an insurance firm. Answer. B. Explanation. A secondary market in insurance involves the purchase of reinsurance by primary insurers. Reinsurance is insurance purchased by an insurer to cover part of its own risks. Option is incorrect as brokers typically operate in the primary market selling policies to consumers. Option C is incorrect because transferring policies to other insurers is not considered a secondary market transaction. Option D is incorrect as offering stock in an insurance firm pertains to the financial market, not the insurance market. Question 27. What does subrogation in an insurance policy refer to? A. The process by which an insurer pays the claim before determining the cause of loss. B. The process by which an insurer takes legal action to recover the amount paid on a claim from a third party. C. The ability of an insurer to adjust the policyholder's premium based on claims experience. D. The right of the policyholder to file a lawsuit against the insurer for denied claims. Answer. B. Explanation. Subrogation is the legal process by which an insurer seeks to recover the amount it paid on a claim from the responsible third party. This helps keep premiums low by recouping costs. Option is incorrect because paying a claim before investigating the cause of loss is not subrogation. Option C is incorrect because adjusting premiums based on claims experience is part of underwriting, not subrogation. Option D is incorrect because subrogation involves the insurer taking action, not the policyholder suing the insurer. Question 28. Which of the following insurance policies would cover business interruption losses? A. Commercial general liability insurance. B. Commercial property insurance. C. Workers' compensation insurance. D. Business interruption insurance. Answer. D. Explanation. Business interruption insurance specifically covers the loss of income a business suffers after a covered peril disrupts its operations. This policy helps the business continue to pay bills and employees during a period of downtime. Option is incorrect because commercial general liability covers injuries or property damage, not income loss. Option B is incorrect because commercial property insurance covers property damage but not income loss. Option C is incorrect because workers' compensation insurance covers employee injuries, not business income loss. Question 29. What is the purpose of an Aggregate limits in liability insurance. A. To limit the amount an insurer will pay for all claims during a policy period. B. To specify the maximum payout for any single claim during the policy period. C. To determine the cost of the premium based on the insured's risk level. D. To exclude certain types of coverage from the policy. Answer A. Explanation. An aggregate limit is the maximum amount an insurer will pay for all claims combined during a policy period, regardless of how many claims are made. Option B refers to the per occurrence limit, not the aggregate limit. Option C is incorrect as the aggregate limit pertains to claim payouts, not premium pricing. Option D is incorrect because the aggregate limit does not exclude coverage, but rather limits the total payout for claims. Question 30. Which of the following is true about a broad form property insurance policy? A. It covers only named perils and excludes all other risks. B. It provides coverage for more perils than a basic form policy but fewer than an all-risk policy. C. It covers all risks except those specifically excluded. D. It includes coverage for liability arising from the use of insured property. Answer B. Explanation. A broad form policy covers more perils than a basic form but fewer than an all-risk policy. It typically covers risks such as fire, lightning, and vandalism while still excluding some other perils. Option is incorrect because broad form policies cover more than just named perils. Option C is incorrect as it describes an all-risk policy, not a broad form policy. Option D is incorrect because liability coverage is not typically part of a property insurance policy but is handled separately under liability insurance.